Guys, welcome back to the channel. In this video, we're going to go over what in the heck happened to GameStop yesterday. We're going to take a look at the charts and see what they're telling us and kind of go from there. So just to reiterate, guys, not a financial advisor. Make sure that you do your own research. Also, if you find value in the video, make sure that you smash the like button, subscribe to the channel if you enjoy our content. Hit the notification bell, that way YouTube can let you know every time we release new content. So let's get into it, guys. So GameStop, ticker symbol GME, tanked into pre-market trading on Thursday after the company announced the firing of CEO Matthew Furlong and reported quarterly revenue that came in lower than expected. GameStop announced Furlong's departure as part of the quarterly earnings release on Wednesday evening. The company's largest investor, Ryan Cohen, was named executive chairman. The video game retailer didn't hold a quarterly earnings call, normally an industry standard to discuss its recent quarter or executive change. GameStop's first quarter came in worse than Wall Street had hoped, with revenue of $1.24 billion coming in short of analyst expectations of $1.34 billion. Shares of GameStop fell nearly 20% at the market open on Thursday. As you can see the chart here from Yahoo Finance. However, we're going to look at TD Ameritrade's Thinkorswim here in a second. The exit of Furlong marks a shift in GameStop's turnaround efforts. Furlong, a former Amazon executive, had been viewed as someone who could bring GameStop further into digital marketplace. Cohen founded Chewy before becoming a popular activist investor amid the meme stock craze. He joined the GameStop board in January 2021 as Reddit users flocked to the stock and sent the shares skyrocketing up more than in the month. Wednesday's announcement said Cohen's responsibilities will include capital allocation and overseeing management. Cohen tweeted, "Not for long," less than a half hour after the announcement. Hopefully some good things to come for GameStop. Some Wall Street analysts weren't impressed with the GameStop's move on Wednesday. Wedbush management director Michael Patcher maintained his sell rating on shares of GameStop and lowered his price target to $6.20 from $6.50. "We remain convinced that GameStop is doomed. With the declining physical software sales and a shift of sales to subscription services and digital downloads sealing its fate," Patcher wrote in a note to clients on Thursday. While we think that the chain might have some value if run in order to harvest profits, we don't see a turnaround on the horizon without capable management. Okay, I'd have to say, guys, I do kind of agree with that statement as far as, GameStop stock. If you were part of that craze, good for you if you were able to profit off of that. But think about exactly what this is. A retail location, that you can go buy, video games, you can go trade stuff in. But everything is so, transitioned to digital over the past several years, and I don't see that slowing down. Most of the people who buy games now, if I'm not mistaken, a lot of people, just go download them on their respective device and play them from there. So I don't really see the need for a retail location to go and buy and sell video games. I think this is going to be something that's going to eventually just kind of fizzle out longer term, but who knows? I could be completely wrong, and it can completely be transformed, and the new person that's in could get the company back going in a good direction and kind of take over. So let's take a look here at, let me just click on the 5-year. As you see here, this was in December. It went all the way to $81.25 from $2. Can you imagine? It's just been on a steady decline ever since. So let's take a look at the charts of what happened yesterday. Let's see what they're telling us and where it may go from here. All right, guys, taking a look at GameStop, ticker symbol GME, and this is prior to the earnings call. As you see, we were all the way up to about $29. And then I believe they canceled their earnings call, and then shortly after announced they fired their CEO, and you see just fell off of a cliff. And then we're currently kind of trying to settle out somewhere here. I think where they may settle out is about the a little over $19, $19.50 mark, before it starts trying to make a recovery, which is looking like it's what's kind of trying to happen here, as we're currently $20.80. But you can see here that the support is at $19.60. If it breaks below there, you have $15.41, and then if we do settle around here and you want to see it move up, you want to see it get basically above about $23, then $25.20, $27.51, and so forth and so on. Currently $34.99 is your overall tip top of the fib level, and then past that point, as time goes along, you see it just steadily kind of decreases. And so I kind of think that we may eventually kind of break below there and go down to the 1541 level and kind of go from there. We're currently undervalued, so it makes for an interesting swing play here from about $20 all the way to 22 or 23 bucks. But then I would not stay in there past that point. If once it settles out and you see that the the MACD indicator here is starting to kind of get closer together and it settles out at about that 20 buck range, that would be a good entry. Then once it starts moving back up, in my opinion, could possibly get rejected at the 22.80 or close to $23 mark and then fall back down. So if you're looking for a swing play, that could make for an interesting play there, coming into buying in on Friday and maybe selling out sometime next week, or just look to enter Monday. That way you're not holding anything over the weekend that you're uncertain of. So anyway, guys, just want to provide you that quick update for GME and let you know kind of my thoughts and opinions on that. Let me know your comments below. Other than that, we will catch you in the next one.